Several top Chinese auto manufacturers have successively released their first quarter results this year, with generally significant declines in revenue or net profit. According to the 2022 China Automobile Sales Ranking recently released by the China Association of Automobile Manufacturers, the top 10 car companies are as follows: SAIC Motor, China FAW Group, Dongfeng Motor Corporation, Guangzhou Automobile Group, Chang'an Automobile, BYD Auto, BAIC Group, Geely Automobile Holdings, Chery Automobile, and Great Wall Motor. Except for BYD Auto announcing an increase in net profit for the first quarter of 2023, the other 7 companies that have released their operating performance have achieved varying degrees of decline in both revenue and net profit. SAIC Motor's performance has declined in both revenue and net profit, with a net profit decrease of over 49%. As China's top-ranked automobile manufacturer by sales volume, Shanghai Automotive Industry Corporation, referred to as SAIC Motor, released its Q1 2023 report on the evening of April 28. The company achieved a Q1 operating income of 140.657 billion Chinese yuan, a year-on-year decrease of 20.43%, and a net profit of 2.783 billion Chinese yuan, a year-on-year decrease of 49.55%. SAIC Motor explained that the significant decline in performance in the first quarter was due to the impact of competition in the automobile market, which has continued to pressure the company's profitability, leading to a decrease in net profit attributable to shareholders of the listed company, net profit attributable to shareholders of the listed company after deducting non-recurring gains and losses, and basic earnings per share. SAIC Motor also released its annual report, showing that in 2022, the company achieved an operating income of 720.988 billion Chinese yuan, a year-on-year decrease of 5.12%, a net profit of 16.118 billion Chinese yuan, a year-on-year decrease of 34.3%, and a basic earnings per share of 1 Chinese yuan and 40 fen. The company plans to distribute a dividend of 3 Chinese yuan and 37 fen, tax included, for every 10 shares. SAIC Motor is affiliated with the State-Owned Assets Supervision and Administration Commission of Shanghai Municipal Government. Its major subsidiaries include SAIC Volkswagen, SAIC GM, and SAIC GM Wuling. Jiafang's performance has declined in both revenue and net profit, with a net profit decrease of over 86%. On the evening of April 27, 2023, FAW Jiafang Group Company, Limited, hereinafter referred to as FAW Jiafang, released its first quarter report. The company's first quarter revenue was 14.038 billion yuan, a year-on-year decrease of 7.38%. In the first quarter of 2023, FAW Jiafang's net profit attributable to shareholders of the listed company was 62 million yuan, a significant year-on-year decrease of 86.34%, and its non-net profit attributable to shareholders of the listed company was minus 82 million yuan, a significant year-on-year decrease of 121.22%. Prior to this, FAW Jiafang had released its annual report. In 2022, the company achieved operating revenue of 38.332 billion yuan, a year-on-year decrease of 61.18%. Net profit was 368 million yuan, a year-on-year decrease of 90.57%. FAW Jiafang is a medium and heavy-duty truck manufacturing enterprise under China FAW Group Corporation, a central state-owned enterprise of the Communist Party of China. China FAW Group owns domestic and foreign joint venture brands including FAW Toyota, FAW GM, FAW Volkswagen, etc. The performance of Dongfeng Motor Group has declined in 2 aspects, with net profit dropping by over 19%. Dongfeng Motor Group Company, Limited, referred to as Dongfeng Motor, recently released its Q1 2023 report. During the reporting period, the company achieved operating revenue of 2.637 billion Chinese yuan, a year-on-year decrease of 26.49%. Net profit attributable to shareholders of the listed company was 95.6331 million Chinese yuan, a year-on-year decrease of 19.41%. And the net profit attributable to shareholders of the listed company after deducting non-recurring gains and losses was 47.7803 million Chinese yuan, a year-on-year decrease of 51.41%. Previously, Dongfeng Motor announced that it achieved operating revenue of 12.19 billion Chinese yuan in 2022, a year-on-year decrease of 21.61%. Net profit attributable to the parent company was 285 million Chinese yuan, a year-on-year decrease of 23.31%, and the net profit after deducting non-recurring gains and losses was a loss of 29.4687 million Chinese yuan. Dongfeng Motor is a centrally administered state-owned enterprise in China, and its subsidiaries include Sino-Japanese joint ventures such as Dongfeng Nissan, Dongfeng Honda, and Dongfeng Yoeita Kia. GAC Group's net profit nearly halved. Guangzhou Automobile Group released its Q1 2023 report on the evening of April 28, showing that the company achieved operating revenue of 26.393 billion Chinese yuan in the first quarter, a year-on-year increase of 14.03%, but net profit was 1.538 billion Chinese yuan, a year-on-year decrease of 48.89%. Regarding the decline in net profit, Guangzhou Automobile Group explained that it was mainly due to the year-on-year decline in sales volume and profitability of joint venture companies during the reporting period, as well as the impact of price wars, which led to a decrease in gross profit margin for cell phone brands, resulting in a decrease in net profit. Guangzhou Automobile Group is a large state-owned Chinese automobile group. Its current brand portfolio includes GAC Motor, GAC Aion, GAC Honda, and GAC Toyota, among others. In 2022, Sino-foreign joint ventures Guangzhou Fiat and Guangzhou Acura withdrew from the Chinese market. Chang'an Automobile's revenue slightly drops, market value shrinks by over 90 billion. On April 27, Chang'an Automobile Company, Limited, hereinafter referred to as Chang'an Automobile, released its Q1 2023 financial report. During the reporting period, Chang'an Automobile achieved operating revenue of 34.556 billion yuan, a year-on-year decrease of 0.06%, net profit attributable to the parent company was 6.97 billion yuan, a year-on-year increase of 53.65%, and the non-recurring net profit attributable to the parent company was approximately 1.481 billion yuan, a year-on-year decrease of 34.75%. While Chang'an Automobile achieved double growth in revenue and net profit in 2022, its stock price has been falling since it hit a historical high in June last year. Currently, the company's stock price has almost halved, and its market value has shrunk by more than 90 billion yuan. Chang'an Automobile is a car company under the state-owned enterprise China Ordnance Equipment Group Corporation. The company has established joint ventures with car companies such as Suzuki, Mazda, and Ford. Beike Automotive's net profit decreased, and the group showed a loss or a slight profit state. Beijing Automotive Group Company, Limited, referred to as Beike, released its first quarter report for 2023 on the evening of April 27. According to the financial report, Beike achieved revenue of 47.696 billion yuan in the first quarter, a year-on-year increase of 4.29%. The net profit was 4.156 billion yuan, a year-on-year decrease of 8.84%. In 2022, Beike achieved operating income of 1,904.6 billion yuan, with Beijing-Benz contributing as much as 96.2% of the revenue. However, the revenue related to the Beijing brand decreased by 8.1% year-on-year. Beijing Automotive Group Company, Limited is a listed company under Beike Group, and it owns four major business segments: Beijing-Benz, Beijing Brand, Beijing Hyundai, and Fujian-Benz. Another listed company under Beike Group, Beike Blue Park New Energy Technology Company, Limited, has a worse financial situation. According to the performance forecast already released, Beike Blue Park is expected to have a net loss of 5.2 to 5.8 billion yuan attributable to shareholders of the listed company in 2022, with a cumulative loss of approximately 17 billion yuan in the past 3 years. Beike Group is a state-owned sole proprietorship enterprise. Looking at the entire Beike Group, other than Beijing-Benz, all other segments are in a state of loss or slight profit. Great Wall Motors' net profit drops by over 89%. Market value shrinks by over 300 billion. Great Wall Motors Company Limited, hereinafter referred to as Great Wall Motors, recently released its Q1 2023 report. The financial report showed that the company's revenue for the first quarter of this year was 29.039 billion Chinese yuan, a year-on-year decrease of 13.63%. The net profit attributable to shareholders was 174 million Chinese yuan, a year-on-year decrease of 89.34%, and the non-net profit loss was 217 million Chinese yuan, a year-on-year decrease of 116.65%. Regarding the decline in performance, Great Wall Motors explained that it was mainly due to the ongoing product structure adjustment during the reporting period. This was due to the increased investment in the construction and research and development of new energy brands, based on the pace of new product launches in 2023. According to the interim report previously released by Great Wall Motors, the company sold approximately 220,000 vehicles from January to March, a year-on-year decrease of 22.41%. In addition, the company sold 10.675 million vehicles in 2022, a year-on-year decrease of 16.66%, and only achieved 56% of its sales target. Great Wall Motors' market value once exceeded 600 billion Chinese yuan in 2021, but its current market value has shrunk by more than 300 billion Chinese yuan. Chinese car dealerships generally suffered losses last year, and it will be even more prominent this year. Since the end of March this year, listed car dealership groups have successively released their performance announcements for the natural year of 2022. The Huaxia Times recently compiled data from 8 leading companies. Except for Zhongtong Auto, the net profits of the other several dealership groups have all declined year-on-year, and the profitability level is worrying. Among them, Hefei Automobile reported a loss of 1.628 billion Chinese yuan, a year-on-year decline of 341.9%. A survey conducted by the Automobile Dealership Chamber of Commerce of All China Federation of Industry and Commerce in 2022 showed that about 55% of car dealership groups suffered losses or serious losses in 2022, and less than 20% of dealerships achieved profits. Incomplete statistics show that more than 2,004 stores closed and withdrew from the network throughout the year. This situation will be even more prominent this year.